What up and welcome to the coffee shop, everybody. This is your host and barista, and I'm here to give you a little trick. One of the biggest questions I get is, how do I get into the market when it does a pullback? But it's trending really hard and I want to run back in there with everybody else and catch some more beans. Do me a favor and like this video. Don't forget to subscribe to this channel. There's always something new coming out from the coffee shop. What up, guys, and welcome to the coffee shop. It's your host and barista. I wanted to cover a couple of things today, and one of them is going to be mainly continuation entries on high volatile markets. So this is for people that are trading in like Forex, indices, stuff like that. This works in crypto as well, but it has to be in crypto that is like large cap. Okay, it can't be these like, little penny stock kind of things. It has to be large cap. So that's what highly volatile also means. Lots of manipulation, just let you know. Anyway, so I want to cover a couple of things. One of them is going to be this, and the other one, I want to show you just how fast a divergence can take place. All right, I'm terrible at spelling sometimes, sorry. So a divergence could take place. We'll get to this one in a second. A divergence could take place in literally 2, 3, 4 candles. Like, it could start and end in that many candles. So this is why I say you need to stop using divergence indicators. I'm even prompted to take the divergence calculation out of my indicator called the Stochastic. You can go to my profile on TradingView and you can find the Stochastic in there. It has divergence built into it, right? The latest version. I'm kind of prompted to take that out of there, but maybe we'll discuss that as a community. The reason I say that is because if a divergence takes place on a very few number of candles, there is no divergence indicator that will be able to see that. It's not going to happen, okay? Especially if you're using like swing trading or like 15, 30, 1 minute, 1 hour time frames. It's just not going to see it for you. So let me show you just how fast a divergence could start and end. And then I'll show you why you should trade it the way I've been doing it, okay? But you can always find your own way to find confluence with your divergences. Okay, so we have previous structure here, right? This is just drawing out structure. It's basically a pivot with a zone on top. Okay, so let's just see there we go. So we got new highs coming in. We got a break of structure here, right? It broke previous structure, and I'm in this somewhat overbought area. So I'm looking for, there we go, right there. I'm looking for a high, a low, and a high right there on my RSI. And my price has to be doing the opposite. So here you have literally across 3 candles, I have a divergence. I have a high and then a lower high. But here I have a high and a higher high, okay? It doesn't have to be the swing high. It just needs to be a high, okay? That's all. It just needs to be a high in your candle. It needs to be diverging from the other one. So this divergence literally takes place on these 3 candles. Now, obviously, you won't know that this actually takes place until you get a high, a low, a high, and then your RSI actually gets below this one, below that level, and your price gets below that same right here, right? Your price actually gets below that level. So how do you trade this thing? This is the way I usually do it, okay? I'm going to take a box, right? I want to go from the candle that got me in to the candle that got me out of the divergence. But I'm doing it from the open to the close. So the open of this candle to the close of this candle. Okay, you with me? From the open of this candle to the close of this candle. All right, so this is my divergence zone, right? I want to break below this zone, and now I am trading against my divergence. I'm looking for the previous support and resistance, whatever that is, right? You can always just find that just by looking at your, see, I got a swing low right here. Let's draw another one. So I can just move down right here, a little swing low, right? And I'll just do this. So if I break this zone here, coming down, I can use this as my target down here, okay? Now, And immediately after that, usually what you usually have the market does is it does a little pause, and then you start reversing your trend, or you pause again and you continue your trend. So a divergence doesn't mean a reversal in the market. It simply means you've exhausted your current trend. You're going to pause. You're going to do something else. You're going to pause. You're going to do something else. That's it. Okay. Just because you get a divergence doesn't mean the market doesn't just go up and then down. It goes up sideways and then down, or down sideways and then up. It always does that. Okay. So let's see what happens with this trade here, right? First candle breaks way down here, right? And I know that I can get down to at least this level. I'm going to aim for this swing low because of all of the energy that's in here, right? And I'll use the candle itself as my swing high, right? Just use that. Okay. Yep. A couple of candles later, and we get this divergence plays out really nicely, right? Now, this is on a 1 hour chart, okay? But what I want to show you is when you're looking at when you're looking at price action on a high time frame, and then you switch to your low time frame. So I just wanted to recap that quick little divergence for you and show you why I use this zone over here, okay? Some people will use the close of the candle that started the divergence and the close of the candle that ended the divergence. So their zone would look like this, right? But that would be really hard to track because this, for example, when it plays out on very few candles, it's very hard to catch up to it. You're going to miss a lot of the trade, right? And so let's get rid of all of this now. Replay that section for yourself anytime that you want. Now, what I want to show you is re-entries for very strong trending markets. It's very hard to re-enter the market when you have a pullback and then it pushes back in, a pullback and then it pushes back into the direction of the trend, right? So what you want is you need to find your high time frame. That's step one, right? You're going to look for your high time frame, okay? What is the direction of your high time frame? If you I already know the market's going to be in a downtrend, so let's just use that, right? So if you know your market is going to be in a downtrend, like I said in the beginning of the video, to re-enter, you want to break the uptrend lines. You got me? This is the downtrend, which is what your market is going to be doing, let's say, right? And it's not because I had a divergence. We're just using this as an example. Price is going to dance around and start pulling down away from your trend line and then start pulling back up. So it's going to make this upwards trend line, like it's going to start closing higher and higher, okay? Back towards the trend line. It's not going to get to it. It doesn't always get to it. But as it starts moving in that direction, what you're looking for is higher low, right? So in a downtrend, you have low, high, lower low, lower high, lower low, lower high, right? You get this stepping down little setup going on, right? This is market structure coming down. What you want to do is you want to find out, okay, it's moved down. You want to see that it's moving up, okay? Don't worry about this. If you break this, you got a little issue going on if you break that level. What you want to do is you want to see where's your trend line, what's the direction. If you're moving towards the trend line, you simply have to mark out your first low. You need to mark out a higher low. Let's just make this a higher low like that. So market's coming down gives you a higher low, right? Somewhere in there, it's going to give you another higher low, okay? And that's what you want to mark. You want to mark those two. And I'll show you what that looks like on a smaller time frame because that's where you actually catch these moves. Market comes down, makes a higher low, and then it starts to consolidate a little bit and makes another higher low. You want to mark the first higher low and the second higher low. There is your trend line. But then your RSI is going to tell you everything you need to know. So let's just get down into there, right? I'm using this trend line tool that I created. Some of you have it, you beta testers. I simply want to see both of these lines pointing down. That's just what I want to get to. Let's just get to that point very quickly, okay? Let's see. There we go. Oh, nope, not yet. There we go. Okay, so they're both pointing down, right? All right, so what I'm gonna do here is I'm actually gonna just do this here. Stick that out to the right and put this one out to the right. Oops, I don't want that. I'm just gonna make a trend line here. There. I don't necessarily need this anymore. I'm going to drop down to the 5-minute time frame because I am on the 1 hour right now. I found the trend of my market. It's down, right? You can see that the indicator's pointing down, and I have lower highs, right? And I just started getting lower lows, right? And more lows down here. So let's see how this plays out, right? And I'm going to try and do this in as least technical aspect as possible, right? So like I said, you're going to see the market in a downward move. Then you want to see it start pulling back and then come back down again. You want to find that first higher low and the next higher low, okay? That's going to be your new trend line going up towards your downwards trend line. So you have this one that you drew earlier. This is a downtrend. This is the uptrend, right? The pullback of your downtrend. Okay? I hope that visual helps you out a little bit more. Let's see. There. So now, what I want to do is I'm going to let price play out until I get a higher low, right? Let's see. I want a higher low, and then I need another higher low. And it's usually going to happen at a higher pivot level. So let's just kind of get in there. All right, we got lows taking place here. Okay, this looks like it's starting to play out, right? I got lows. There we go. Perfect. This is exactly what I'm looking for. Now, so here I have a low, and a low, right? This is my lowest one. It's a little consolidated on the RSI. I want an actual low, like right here. Okay. I'm going to take this right here. Okay. Because it's a low, comes down, it's right here. These two lows have a high in between them. So you need that A shape. That way you know that you have lows. Without this, you do not have lows. Okay, it's missing. All right, so let's pull this out. What I want to do is I want to draw a line from here, from this low, across this one. Now I'm going to show you why I'm choosing these two, not this candle, but this one. Why I'm choosing these two specifically. I want to cross the low here and the low here. Look at the RSI, okay? The RSI, this is a low, and then it crossed above its moving average. Now, here's a low, and it crossed above its moving average, right? But it's a lower low. This low, right, is lower than this one. This low is higher than this one. So I want the one that crossed the moving average, crossed the RSI moving average. See if this helps you. And here's the moving average. Okay. I want the one that crossed below the RSI moving average and made a higher low here. Okay. That's what I'm looking for. So that means here is my trend line. Price should move up and then cross back below this line. When it crosses below this line, I enter into a bit of a zone. Okay. So let me just kind of draw this out for you real quick. It kind of looks like a triangle, right? You have this. I'm just flattening this out. Okay. Nope. I'm sorry. I want this right there. I'll just draw some lines over here so you guys could see clearly what's happening here. All right. So, oh, there's the low right there. Right. Okay. Now, from a visual standpoint, I can just see this very clearly. I'm drawing these on the chart just so you can understand what it is that you're looking for, right? So when price moves up and starts coming back down, once it crosses this line, this most recent low, it enters into this zone, which is the difference between this low and this low. This is a range, okay? This is a stronger part of the range. And once you close below this, right, then you have a continuation of your trade. You need to break through the continuation. You have to break through that entire zone. So your zone effectively looks like this. That's your zone, all right? But this is the entry into the zone. This is the strongest part of the zone. And I hope you guys can like really, really kind of grasp onto that. And it's really based off of just these trend lines that are drawn out by the higher low. You get a higher low, moves up, makes another higher low. You draw a line across it. This is the trend line that you need to break. Okay, you got to break below this. This gives you new structure. If you break below this, you get new structure. And if you break below this, you have broken old structure, which is essentially a market flip, right? At that point, you can actually use the RSI formula. And I'm going to show you a two-step on the RSI formula, right? So let's let this play out right here. Okay, doesn't close below it, right? You can see that doesn't close below it. Again, I'm on the 5-minute chart. Nope, not yet. There's the close below, right? Okay. So this is an entry here. The swing high for the RSI is that, oops, sorry, is where it moved up right here, right there. It made this A shape. Remember the A shape we just talked about? Right here. RSI made a move up. This is where you set your RSI formula, right? So I want it on this candle here, right there. Now the RSI value, why did I close that? RSI value at this point is so it'll come out to 1 to 2.8, right? 2.85. Let's pull this down here. 2.85 is what it comes out to. We'll go down here. All right, now. Once I break through this structure, I want to see what the RSI formula, what the RSI is again, if it continues to be a negative number. So this one gets us, okay. See how it pulled up right here, came down and it started pulling back up. Let's see if it makes a new low and then breaks it. Yes, it made a new low and it broke it. So I want to know the RSI value here now. This RSI value, okay, as it broke is 20. So this is now going to be a 1 to 4.04. 1 to 4. I'm simply moving my take profit. 4.04. We'll just go 1 to 4 right there. Okay. Drag that out. Now, this is all based off of understanding how to break this higher low, then a higher low. You draw your trend line, break below the trend line, and you can re-enter the trade. At that re-entry, you can use the RSI formula. So let's just let this play out, see how well it works. Comes right down to it. Look at that, just right there. Hits this nice solid level right down here, okay? And it pulls back, makes a new low, and it pulls back. So maybe I have another continuation here, right? Let's wipe all this out. We already know that one was a win, okay? Let's see what we get now. I'm looking for low and a higher low. I want a higher low, right? So here's my low. This essentially is a higher low, but price doesn't move too high from it. I want to see an A shape above it. See how it moves way up here? Now, here's a higher low right here. I don't like this one because the RSI is not below 50. I want to see an RSI value below 50, below this midline. Right here, okay? It pulled a low right there. So now, there's my low, right? So I have a, let me see, here's this low. I need a high on both sides. Here's a high, here's a low, there's a high, there's the low. See, RSI came below 50, and I want to see another high after that. Is that it right there? Yep, that's it right there. So this is going to be it. Oh, my previous low, right? I want this one right here. I have to close below that level and below this, right? Got to do that. Nice solid move right there. Let's see. Now so if you understand on a larger scale what I'm doing here, right? I have a trend line. My downtrend is in effect. I'm below my downtrend lines, but I'm breaking these uptrend lines, right? So let's get back here. RSI formula again, right there. Where's the last time that it moved up? This is 1.94. This is 1.90. Which one's higher? This one. There's my high right there. RSI formula to the rescue, always. Right here. This is going to be 1 to 2.42. 2.42 right there. Let's go 1 to 2 point. It's close enough, right? Let's pull this up. Also want to use an actual support and resistance. There's a nice zone right here. So I want to get stopped out. Let's get above this. I want to find the high above this right there. Looks like it should be okay. So it's a lesser move in the market, looks like. There you go. Oh, just barely made it. Just barely made it, right? There you go. So came right down finally. And you'll see again, it had to, I didn't move that correctly, did I? There. So it found it right here, which was the previous support level. However, it did make another higher low in the process, right? And let me just kind of drag this out and show you the other higher low. So you have a low, high, lower low, right? Here's a lower low, equal high. Here's your higher low. So what are you doing? You have a low and a low. Draw your line, break that, right? Break this. It does it in one candle. If the one candle breaks it, you can use the candle itself as the RSI formula, right? So this RSI formula says it's 1 to 2.94, okay? 2.94. There we go. Pull it 2.9. See what we get here. Trade is, oh, come on, play nice. There you go. Trade's over right there. All right. And it does pull another higher low right here. Does it again, right? And again, this is what using the RSI formula to its extreme can be tricky. You're supposed to really just pull it back quite a bit, you know, to make sure that you're not trying to get to the extreme of the move, right? So there was the low, and then it made a higher low right here. So you just draw that out. Your high is right there. You can see that you have that A shape again. Draw your line, and you have another continuation right there, right? Here's your high. Let's find this again. RSI value is 13. So this one is 1 to 3.3. This is 3.3 on this one, right? 3.3 down here. All right, but I'm really, really far from the moving average. I'm also way down here right now. So I'm going to go 1 to 2.3 because I'm way down there on the RSI. It's like way down here. Also, you'll see that this low is lower than this low. So this would have been the end of the move. That would be it. So there's probably a nice pullback coming up after this. Let's see. Unless there's a lot of manipulation, I don't know. But it does run flat for quite a while. So there's no move left right there. So I hope that helps everybody understand how to catch re-entries into the market, right? I'm going to wipe this out. I'm going to show you again real quick. Now that everything is already on the chart, let's just wipe all this out, right? So what you're looking for is a higher low. You want a higher low, and then you want to draw that trend line. On a higher time frame, you want to see where you are, right? You're in a downtrend, okay? You're in a downtrend. You want to find your low, right? And then a higher low, and price has to break through that trend line, okay? So you find that by just kind of dropping down to your smaller time frame. You got lows, you got a higher low right there, see? Got a low and a higher low. Draw your trend line. Your re-entry is here on the breaking candle. Use your RSI formula. It works for you, right? And then when you get another higher low, because you're in a downtrend, right? you're in a downtrend. If you get a higher low, you know you've met some form of resistance. Now, when you get a higher low, the low is higher than the previous one. The high cannot be higher than the previous one. It has to be lower. All right, that's all you need. So let's see. I don't get a higher low. I don't get a higher low. Here I get a higher low. Right? Here's a higher low and another higher low. Right there. Draw the line. Breaks down. And then again, low. There's no, okay, so here's a high, here's a low, right? Another high, another low. So you actually get two entries. You get one here, right? Here's a low, lower than this one. You get another entry there, right? Low, lower, lower, higher. Here's the previous, here's the new one. Re-entry. And all I'm doing is I'm looking for this upwards trend line to be broken because it's the opposite of my main trend line. That's it. Okay. Hope that helped you out, guys. I know it was a bit of a long video, but you know, hey, this is how we stay informed, right? And thanks for following this channel. Always like and subscribe to this, and there'll be something new coming for you later tomorrow. Peace out from the coffee shop.